The Nigerian Naira slid sharply in the parallel, black, market, trading at approximately 1,565 Nigerian Nairas per $1, down from the week's 1,535–1,540 range, marking heightened speculative pressure. Meanwhile, the official exchange rate stood nearly aligned at 1,536 Nigerian Nairas per dollar, indicating convergence between official and parallel rates. July turned out to be the strongest month of 2025 for the US dollar globally, as the dollar index, DXY, rose amid hawkish sentiment from the Federal Reserve and risk-off investor behavior ahead of key US inflation data. In Nigeria, the surge in dollar strength coincided with renewed demand for foreign exchange, particularly on the black market. The Naira's depreciation came despite improvements in market liquidity and alignment across forex windows. Forex market dynamics explained. The Central Bank of Nigeria, CBN, continues with reforms aimed at liberalizing the Naira, resulting in reduced arbitrage between official and unofficial rates. The improved alignment suggests more transparency and investor confidence. July money flows into Nigeria increased, including portfolio investments, export receipts, and remittances. Despite this, the surge in demand for dollar liquidity, fueled by importers and speculative traders, outpaced supply, particularly in the unofficial market. The official Nigerian foreign exchange market, NAFEM, saw rates improve modestly, from about 1,532 Nigerian Nairas on July 1st to 1,536 Nigerian Nairas by month-end. Meanwhile, the black market rate weakened to 1,565 Nigerian Nairas per dollar, reflecting speculative volatility. Economic and policy implications. 1. Retained volatility, despite reform. Even with improved policy mechanisms, the parallel market remains sensitive to external shocks. Ongoing speculation and dollar demand, particularly from the import sector, continue to weaken the Naira. 2. Inflation risk rises. A weaker Naira increases the cost of imports, fuel, food, medicine, exacerbating an already elevated inflation rate, hovering at over 22%, and contributing to economic hardship for households. 3. Foreign investor sentiment. Despite tougher forex volatility, analysts noted increased foreign portfolio inflows during July. This boosted investor confidence, especially with growing transparency and narrowing exchange spread. What happens next? Policy interventions. The CBN may take steps to further boost FX supply and narrow speculative gaps, especially ahead of August foreign rate exposure and global economic data releases. Market expectations. Continued volatility is likely until Nigeria receives more inflows or external shocks calm. Observers also await the launch of the Africa Currency Marketplace, PAPSS, to ease dependence on the dollar. Public pressure. Rising pump prices and commodity costs may reignite unrest unless short-term stabilization measures are introduced. Final thoughts. Nigeria's Naira faced sharp pressure in the parallel market as investors sought dollars amid a rising global greenback. While reforms are yielding better alignment between forex windows, volatility persists, and Nigeria remains vulnerable to global financial shifts and domestic policy gaps. Amid mounting inflation and import costs, how authorities respond in the coming weeks will shape economic sentiment throughout Q3.
Thanks for watching. If you enjoyed this update and want to stay informed with fast, reliable news, don't forget to subscribe to Newsflash 360. Hit the notification bell so you never miss a story. Your next headline is just seconds away.